As the Q1 earnings season is off and running, all eyes are on the Magnificent Seven. That's Google, Microsoft, Nvidia, Meta, Apple, Amazon, and Tesla. Now, these tech giants account for roughly 1/3 of the S&P 500's market value, and they've been pivotal in driving market performance over recent years. However, mounting economic certainty, fueled by trade policies, tariffs, and shifting investor sentiment, I want to explore the Mag 7's past stock performance, future earnings projections, and attempt to uncover any patterns that we can take advantage of right now. Hey folks, welcome to my trading room. We're going to take a deep dive into Mag 7 earnings for Q1 of this year. Now, we already know it's been a rough year for the stock market so far, but recent talks of lowering tariffs and making deals has seen the stock market jump up double digits for many stocks this week alone. Mag 7 stocks have seen wild swings as well. Now, you know I'm not a day trader, so let's step back and take a look at annual performance of each. Our top performer is Tesla, which led the Mag 7 with a 41.38% gain despite significant volatility. And its stock price has surged from $183 to over $259, likely driven by optimism around its AI initiatives and EV market positioning, although it's facing some challenge right now, including tariffs as well as competition. Meta, Apple, and Nvidia also posted solid gains. Meta's growth reflects AI enhancements, while Apple's performance aligns with its ecosystem resilience, and Nvidia's growth continues to be fueled by chip demand. Amazon showed the modest growth supported by AWS and e-commerce strength. Underperformers so far, Alphabet down nearly 4%, Microsoft down 2.75%. Alphabet's drop is really led to its competitive pressures in AI and advertising, while Microsoft's slight decline might warn investors over its infrastructure spending. Now, year to date, it's been pretty sloppy for the Mag 7 stocks. Everything's been slipping double-digit gains, with Tesla bouncing off a 40% year-to-date drop. There might be some light at the end of the tariff tunnel, however. As of noon today, Tesla has already jumped off its earnings report, which was dismal as auto sales slumped 20% year over year. Yet investors shrugged that off, noting that Elon Musk might be returning to his full-time job soon, and with it, maybe that negativity on the brand might subside. Let's talk earnings. In Q4 of 2024, the Mag 7 delivered another robust performance, but stock performance over last year has been mixed. Nvidia, Amazon, and Meta all standout performers, contributing 73% of the group's earnings growth, with Nvidia leading for 6 consecutive quarters due to its AI-driven chip demand. However, not all reports were universally celebrated. Apple, Microsoft, and Meta all faced post-earnings stock declines despite beating estimates. So where do we go from here? So far in Q1 2025, analysts project Mag 7 earnings growth of about 13%. That represents a significant slowdown from last quarter's 31% earnings growth. For the full year, expect earnings to rise 12.6%, but that's compared to a 2024 40% rise. Definitely some cooling off happening. Nvidia is expected to maintain the lead, driven by AI demand. Amazon and Alphabet benefit from cloud and advertising strength. Apple faces headwinds in China, with consensus EPS estimates for fiscal 2025 dropping, and Tesla's outlook remains uncertain, with its stock down roughly a third year to date, partly due over concerns of Elon Musk's political activities and partly due to competitive pressures with EV manufacturers. Investors are focusing on 3 things this quarter. Number 1, AI spending. Number 2, tariff-driven inflation. Number 3, economic health. Let's provide some context here. So Microsoft and Meta were criticized over their AI spending plans in Q3 2024. They're going to need to provide some clarity on future spending. Apple's iPhone sales will signal consumer resilience amid tariff-driven inflation risks. And of course, Amazon's AWS and Alphabet's ad revenue will gauge enterprise spending and economic health. Now, as traders, we focus on patterns. So what kind of short-term patterns can we find inside the Mag 7, both before and after earnings? Well, I've done the research, and it looks like this. Let's start with patterns that work, and that's the ones before earnings. Here's a table of each Mag 7 stock 7 days before earnings. Look at the information inside the red box. This represents the week prior to each earnings announcement and the percentage movement during that week. A positive number means the stock rose by that percentage the week prior to earnings, and a minus number means it dropped prior to the earnings. Now, these are percentage moves. Only one stock has a pattern of moving higher the week prior to earnings every time over the last year, and that's Amazon. Now, for option traders, we want to look at the option volatility and what it did during the time frame. So here's the IV patterns for each stock and its options before earnings. In a nutshell, all of these stocks on average have options that generally rise into earnings. NVIDIA didn't over the last 2 quarters. So perhaps option traders knew something about the future price. But I concentrate on best median percent change on the chart. It tells me here the stocks on average have the biggest surge in option volume a week prior to earnings. Now, why is this important? Because the options on these stocks have been getting a lot of attention going into their earnings reports. And even if the stock doesn't move, the options could go significantly higher simply on demand. Look at Amazon's options here in January. Back then, the at-the-money calls were a week away from earnings, and they were priced around $8.05. That's $805 for a contract. Now, pay attention to that number on the far right. That represents options volatility, and at that time, it was just below 59. We expect that number to rise as we get closer to earnings. Here's that same option at the close just before earnings are announced. Now, the stock price is only up 1% in the last week, but look at the options. They're up 15% in a week, and options volatility, well, it nearly tripled. Oh, and if you hung on to your call options after the earnings were reported, well, that didn't work. Total loss. Amazon stock dropped a bit, but the options dropped and expired worthless. The takeaway here, finding patterns like this and buying options ahead of an earnings event is typically not time risky, at least until the earnings have been reported. After that, the earnings event can make these very risky. Think of it this way. There's a reason that Super Bowl tickets are their highest right before kickoff. Any scalper left holding tickets once the game starts knows the value's going down. The same is often true with options into and through an earnings report. Let me know what you think. Leave your comments below. And here's my conclusion. The Mag 7 remain a cornerstone of U.S. equity markets and for investors. But as pattern traders, we look to spot short-term, high-probability patterns that offer the least amount of risk, all while avoiding the pitfalls of earnings and, of course, buying and holding the stock through uncertainty. Thanks for watching the video. I'll see you on the next one.